So the S&P 500 recently had some strong selling pressure take place from its recent all-time highs, making some market participants start to panic. But in this video, I want to go ahead and touch on why this isn't something that you should really kind of fear. Now, this selling pressure was pretty much kicked off from what we saw yesterday at 2 p.m. Eastern time, which was the FOMC meeting where we had the Federal Reserve make an update on monetary policy where they decided to cut rates. Now, that's bullish, right? Everyone expected that the Federal Reserve was going to go ahead and cut by 25 basis points, and they ended up doing so. But we did hear some hawkish rhetoric from the Fed, and we also got a summary update from the summary of economic projections, and this is what really led this drawdown. See, what we have here is an updated of the Fed dot plot, which we only get whenever we have a summary of economic projections, which, by the way, we only get them after every other meeting. So it's not like every single meeting we get an update on this. And what we ended up seeing in this recent update is that we're not seeing as many cuts as we expected for 2025. And for you guys to kind of see what we ended up seeing from the last time we got an update, this is what we got in September. Now in September, we ended up seeing that the Fed was expecting to cut more. So this difference from September to December of the Fed saying, wait a minute, we're not going to cut as much as we originally thought, made market participants start to panic. But here's the thing. One of the things you have to kind of understand is that the Fed is kind of a bit of a joke. Now, I don't know if anyone remembers, but remember when the Federal Reserve or Jerome Powell was saying that inflation was transitory and he was completely wrong? Now, you know, the Federal Reserve employs the most amount of PhD level individuals who are highly qualified, yet they oftentimes get things wrong. In fact, they have a history of being wrong specifically for their dot plot predictions. See, this is just what they expect to do, but a lot of times they end up changing what they actually do. And so this is something that you really shouldn't panic about. However, after this recent event, we ended up seeing the fear and greed index now actually tick down to extreme fear. But like one of our funny guys on Twitter said, never wise to enter new shorts when we are at extreme fears. Just saying. Now, of course, he didn't have to have the middle finger emoji, but nonetheless, you don't want to be overly bearish when there's this extreme fear going on, right? That's kind of where we actually want to be greedy. I mean, you hear it all the time, this kind of philosophy that Warren Buffett has, be greedy when everyone is fearful and fearful when everyone is greedy. And so, I mean, this time isn't different like any other time. I also wanted to share this tweet from Daily Chartbook saying, every time the VIX jumped by 50% in a single session, it plunged over the next month. Every single time. Is this time going to be different? Seems like it could be. But we all know the danger of this time is different. And again, it happens all the time. People start to panic, they end up selling, and guess what ends up happening? The panic kind of slowly vanishes away, and it ended up being in time to actually buy more. Now, of course, this is not a buy or sell recommendation. You should only trade or invest in whatever you see value in. But for a lot of names that I'm, currently having a position in, I'm actually looking to scoop up some more shares, except for Tesla, right? Tesla, fundamentally, I still think is a bit stretched, but there's a lot of other names that I think, wow, this is a great opportunity, which I shared one of them within the Push and Profit private group just yesterday in our daily briefing. Now, of course, if you want to have access to those daily briefings, make sure to check out the links in the description down below. There is a coupon sale to join for December. But with that said, I also wanted to point out to something else. And that, of course, is market breadth. See, we have here from Barchart tweeting, the US stock market just saw its second worst advanced decline day since June of 2022. And we see that market breadth is pretty weak. Now, why is market breadth and the advanced decline kind of something you want to pay attention to? Well, it kind of leads back to one of the tenets of Charles Dow, which if you don't know, he was the founder of modern analysis for technical analysis. And one of the things he said is that the averages must confirm. And so when you have the market at these high levels, but then the market breadth kind of saying that, look, it's actually weak, that shows a divergence, and that means that the market health isn't strong. And so what we're seeing is that the S&P 500, which has a weighting towards a lot of those mega cap stocks, well, that's kind of holding up. We're seeing a lot of weakness in the equally weighted, S&P 500, which is ticker symbol RSP. And I want to kind of show you guys this chart right over here, which is RSP. So this is the S&P 500 equally weighted, meaning the weighting for top names like Apple is the same for every other company within the S&P 500. And we've been seeing that market breadth has been declining. And that, of course, is kind of a red flag. That's dangerous. But I want to kind of just parse through this a bit closer. For example, I layered over the ADX technical indicator, which shows that the trend is strong. And of course, with the price action falling down, this means that the downtrend is strong. However, when you also layer in the DMI indicator, which kind of shows the actual, direction of the trend, we see that the bearish trend is kind of cooling off. And so it's not as strong as what it was before. And this is something that we want to be mindful of, because yes, market breadth is weak, but it's kind of not, or what I'm saying is that the strength of the bearish positions in the equally weighted market is kind of showing to cool off, and that's a positive sign. But of course, we also have to understand what's taking place from a political standpoint. Of course, I hate seeing what's going on with politicians, but we have to kind of understand what's going on because policies can influence the overall economy. And recently we had Elon Musk kind of, crash out on Twitter or X, kind of saying how this new spending bill has a lot of pork, has a lot of fat, and that we need to trim this, and kind of urging, our policymakers to not pass this bill. However, recently we got news that House Republicans have reached an agreement on a Plan B to avert a government shutdown ahead of Friday's decline and plan to vote on Thursday, which is today. Now, is this new bill that's trimmed going to go through? The chances aren't, in our favor, but the good news is at least we have that Plan B that kind of provides a little bit of certainty in this time of uncertainty. So of course, that's something that we're going to continue to monitor. And then as well as tomorrow, we get an update on inflation, because of course, the Fed bases their decision on what's going on in the labor markets and also what's taking place with inflation. And tomorrow we get an update on the inflationary gauge. So that's also something that we're going to want to watch. But the core message for this video is that we shouldn't panic, right? I mean, especially because the market is not crashing down. We take a look at this big drawdown, or I really got to say big with quotation marks, this drawdown. It's not much. I mean, it's 3%. The market has done extremely well for this year, and we just have a few more trading sessions before this year is over, and I don't think everything's going to start crashing, right? Of course, we also have the idea that a lot of market participants aren't going to be also selling off their entire positions simply due because of capital gains tax. You usually see that taking place in January. That's why they call that like the January effect. So this may actually be that time to go ahead and buy the dip. Again, if you disagree, then by all means sell and panic, and if it's the right time and you time the market, good, right? But this may likely be just another scenario that we often see of just panic. And Wall Street does not change. This happens over and over again. All you have to do is not stress out, understand what's currently taking place, and just dollar cost average. Not that hard. It's not that hard. It's very simple to do. Again, you should only do whatever you see value in. Now, real quick plug, I do have the Wall Street long sleeve sweaters out. You guys could check out. There's going to be a little button for you to click that. So if you guys are interested, pretty warm, by the way. I think it's very cozy. So if you want to support the channel, definitely check that out. But with that said, before you guys go, make sure to check out this next video right over here, and I'll see you guys on that next video. Take care, guys.